Hi, this is Dan Collins coming to you live once again from Traders Expo Chicago. Joining me is Andy Strasman, who's the founder of Totem Asset Group, a CTA. But Andy's also working on an educational program that's going to teach trend following to a broader audience. And we were just speaking, Andy, you were just telling me why that's so important now.
Well, I think if you look back over maybe the last 5 or 10 years, you've seen an explosive growth in people getting into the options markets. And I just kind of think it's not really because they're experts on vol skew and they've got a better pricing model and Greeks and everything. I think it's because they're seeking leverage. They can't afford to buy 100 shares of an $800 stock, for example. So they kind of get pigeonholed, or they find some safety, or not safety, but they find like some leverage in the options. Now, I think we're starting to see, we saw the E-micro NASDAQ launched by the CME. We see the guys at Tasty Trade, they're launching the small exchange. So I think over the next 5 years or so, what we might see is smaller bite-sized contracts, futures-based contracts, and using a trend trading approach, this will give your average investor a chance at survivability. When you have to risk, say, 180 ticks or something on a trade, then they can actually do it if it's a smaller size contract. So.
And we know there's all sorts of strategies that come in and out of fashion, but trend following has proven to work since the early 80s with John Henry's programs. Mm-hmm. We know that it's gone through a difficult period in the last half dozen years.
And I think we know why, actually, because you can overlay the growth of the Federal Reserve's balance sheet, and you can overlay the growth of the ECB's balance sheet, and it explains most of the up move in the stock market and most of the CTA drawdowns. What they've been doing is basically keeping a lid on volatility, making sure nothing happens. So to the extent that they're able to do this forever, I'm not so certain. So maybe we'll see a resurgence in those types of strategies.
Yeah, and I just got finished a month ago speaking with Bill Eckhart, who over more than 2 decades has earned double-digit returns. He did the turtle trading experiment, and he pointed out that nothing can outperform as long as trend following did, as long as it has.
I'll add to that actually. Trend following as a strategy set is working swimmingly in other asset spaces. For example, you take a look at the VC space. The whole principle of trend following is you get 3 winners and 7 losers. As long as the losers are small and you have outsized plus-sized winners, you're going to make money. And that is a core premise of trend trading approach. The fact of the matter is, short of equities over the last 5 years, there have been very few and far between large trending moves.
Okay, well, you put together this 40 and 20 out program that helps teach people about the tenets of trend following. So why don't you explain where our listeners can learn more about this?
Have a look at www.40in20out. So that's the number 40in20out. And I know the name right now would probably seem a little silly, but once you understand it and you understand what we're doing, it will make a ton of sense. You can also follow us on Twitter. It's twitter.com/40, the number 40in, the number 20out.
All right, Andy, thanks for joining us.
Yeah, that's great. Thank you.
All right, this has been Dan Collins with Andy Strasman, live from Traders Expo Chicago.